if companies have been doing consistently well, if they're generating a lot of profits, lots of cash flow, lots of revenue growth, i.e. sales growth, lots of profit growth, lots of cash flow growth as well. And they've been consistently doing that year on year, year after year. What we're saying is, well, management they're in the right place. They're a good team making the most out of the market. This ought to continue at least for another 12 months, let's say, and we'll review as we go on. That's all we're saying. We are not in the crystal ball business. So I just wanted to make that clear as well. Now, this is going to be the agenda, 4 parts to it. I'm going to give you the market overview in just a second. We're going to address the problems. How much do you need to retire? How do you invest? How do you buy a stock? Don't worry, most of you know how to do that bit, so that'll be really quick. And should you buy a stock or a portfolio? And I'm going to argue you should actually be buying a portfolio, not a stock, okay? Because how a stock behaves within a portfolio is different to how it might just behave independently. And you can get 2 stocks which are relatively volatile, both with, let's say, a 20% average return. But because you've mixed them, you get your 20% return, but with a lot less volatility. Okay. And that's what a portfolio is. And when you add in 18, 19, 20 more stocks or funds, that's what should happen. You want that same return, but a lot less volatility. So I'm going to argue why you should have a portfolio. How do you know when to exit? How do you know what risk is? In other words, whilst you're holding something, imagine your house. If you kept checking the price every day, you might think, oh my God, it's quite risky, this house owning business, because it goes down. I mean, the value of our house has gone down 10%. But if you're not going to sell it, what the hell do you care? And that's the approach we're going to take to risk. But the problem with the markets is somebody's shoving the valuation of your house in your face every single day. Imagine somebody knocked on your door every single day and said to you, and over a period of a year, you went, oh my God, the house is worth 10% less than it was. You would probably panic. Of course, why don't you do that? Well, because nobody goes and tells you the price of your house every single day, thankfully. Okay, and we're going to take a similar approach to investing as well. I'm going to explain that to you to give you that relaxation that you should have in a pension, the peace of mind that you should have. And that's going to be our key focus for tonight, is making sure that everybody has that peace of mind that they deserve in a pension, because that's the end goal of it. I'm also going to start some polls. I'm going to ask you whether you think the FTSE is going to be high by the end of the year. There should be a poll on your screen now. Okay. And then I'm going to present you with some solutions. How much do you need? When to buy stocks or a portfolio? And we're not going to be gambling and tip sheeting. Oh, buy this now, I've got a hot tip. That's not what we do. It's our pension. We're going to be professional about it. How do you buy? SIP, ISA, 401k, depending on where you are in the world. What to buy? Obviously, we're going to talk about that. That's what most people are only focused on. Where to buy? I'll show you some